Let's discuss those HDFC numbers then with Keki Mistry, a steady set of numbers as always. Mr. Mistry, good morning. Congratulations. Quite a fantastic quarter. PAT above street estimates, also aided by lower provisions this time around. How do you see provisioning for the remainder of the year and also the kind of growth that you're now anticipating for upcoming quarters?
The provisioning was lower in this quarter because we've been very proactive with our provisioning and made provisioning in advance in anticipation of problems or in anticipation of weakening asset quality or whatever. So we carry a total provisioning of 1,200 crores specifically for COVID. Whether we would need to increase that provisioning in the third and fourth quarters is very difficult for me to sort of tell you today. Things are looking better at the ground level at this moment, at least. Our collection efficiency for the month of September, which is after the moratorium was removed, was as much as 96.3%. So collection efficiency has been fairly good during this period. The total provision that we carry today on a balance sheet basis stands at 12,304 crores of rupees, if memory serves me right. And this is against a regulatory requirement, which is a lot lower. So the regulatory requirement, in the sense, if we go strictly by the regulations and make provision for standard assets and based on the period of default, that 15% for 90 days outstanding and then 25% and whatever is laid down by regulation, then the total provision we would have needed in the balance sheet would have been 5,621 crores, as opposed to which we are carrying 12,304 crores. So touch wood, we are adequately provided. How will this pan out in future? Very difficult for me to give you future guidance because at this moment, we don't even know how much restructuring will come up. We do not think it will be a very material number because, as I said, for the month of September, our collection efficiency was over 96%, 96.3% in the aggregate.
Sure. What are some of the other factors that aided profitability, Mr. Mistry, this quarter? And again, in terms of how that's building into the outlook for the upcoming ones.
As far as the quarter went, I think the 2-3 features of the quarter. One is individual loan disbursements picked up significantly faster than what our original estimate was. Significantly faster. If we look at September, our September loan disbursements, individual loan disbursements, were actually 11% higher than what they were in the month of September of 2019. And as if that was not good enough, in October, we had a bumper month. So the month of October saw the highest amount of individual loan disbursements, or the second highest amount of individual loan disbursements that we've ever done in HDFC's history. And if we compare October of 2020 with October of 2019, we had as much as a 35% increase in the amount of individual loan disbursements. But let me qualify that 35% by saying that the month of October of 2019 was a relatively weak month compared to the rest of the quarter. So if we average the quarter October, November, December of 2019 and then compare it with that average, then the growth would not have been 35%. It would have come down to a little over 22%. But still, whichever way you look at it, the growth has been much stronger than what one would have originally estimated. Funding costs have been coming down. We've been also dropping our lending rates in conjunction with the drop in funding costs. Spreads have marginally expanded. Net interest margin has expanded. Net interest margin for the quarter stood at 3.4%, though for the 6-month period stands at 3.3%, which is better than what it was in the previous year. So I think it's a combination of net interest margin.
Mr. Mistry, morning. Now, given the high competition in the housing finance segment, we have seen home loans which continue to remain low. But you've managed to expand your margins by 20 basis points sequentially despite of this. Do you think there is a case now for margins to expand further, or do you think that they will hover around these levels?
Historically, if you go back to the last 10 years, I can't remember any time when the margins were much higher than 3.3 or 3.4, or maybe at most would have been 3.5%. See, the reason you've seen this little expansion in margins is also because in the first quarter, we had kept a very large amount of surplus funds in, surplus liquidity in the balance sheet. On a daily average in the first quarter, we had 32,000 crores of excess liquidity in the balance sheet. And this 32,000 crores gave us a negative carry, meaning the return we got on that 32,000 crores of investment in liquid funds was lower than our cost of funds. In the second quarter, we became a lot more confident about the liquidity situation in the market, and we brought that excess liquidity balance down from 32,000 crores to 22,700 crores, if we take a daily average. So that also would have contributed to the net interest margin, because on that 32,000 crores, the negative carry would have reduced in the second quarter. Now, given in the third quarter, as things stand now, and I repeat, as things stand now, we remain reasonably comfortable with the level of liquidity, and we could further consider lowering that level of excess liquidity from 22,700 crores to, maybe, it's difficult for me to give you a number, but to a level which is below 20,000 crores.
Given now the festive season as well as the increased awareness of own houses amongst the pandemic, what is the outlook when it comes to your loan growth in the second half of FY21?
I don't know. It's very difficult for me to give you a projection on what the loan. We never give projections, but we have seen on a month-to-month basis that there is demand. Demand till 31st October was really the last working day was Saturday. So we saw that improvement right up to Saturday, and we hope that that momentum will continue. Because as I told you earlier, this is really a good time to buy a property because of the various reasons that I mentioned. So I hope the growth continues through.
Thank you so much for taking time out and joining in and giving us a better idea as to what have been your earnings growth, your outlook on your net interest margins, as well as the liquidity position.